Liquidation of a company. Myself, Dr. Dnyaneshwar Marathe, Head Commerce and Management, Pratap College Amale. In the series of accountancy, this is the last topic of the liquidation of companies. First topic is when two companies facing the problems, they decided to amalgamate. Our first lecture is amalgamation of accounting. Then second lecture is absorption, when one company takes over to another company, that is acquisition. That is, we called it absorption of the company. Third, external reconstruction, when the company issues facing the issues of financial crisis. In such a lecture, we discuss in the external reconstruction of the company. Then fourth one, the internal reconstruction of the company, when the company facing the financial losses from last years, more years, then company want to revalue the assets and write off the all fictitious assets. That is negative picture eyes of balance sheet before the stakeholders of the company. In this situation, the company going into the external reconstruction, internal reconstruction. But the company, after all the remedies of amalgamation, absorption, internal reconstruction as well as external reconstruction, but the companies nothing overcome the issues. So in this situation, the company go into the liquidation. This is the last stage of the business to shut down of the company. But we simply say the shutdown of the company, but it is not an easy way to liquidate the company. In such a situation, company required to proper following the procedure of the liquidation. The liquidation process, we have the know the proper concept about the liquidation. In the liquidation process, the company required to follow the legal process, that is formal process of closing the business concerned. In this process, it involves the seizing and stopping all the business operation, selling of its assets, and using these assets sale amount to pay the creditors and other debenture holders, and lastly shareholders. In this shareholder, first we pay the preference shareholders, afterwards the remaining amount, if we have, so it will be the paid to the equity shareholders. The core process of the liquidation is the liquidation phase focus on the cleanup of the company's balance sheet, means the dispose the business. In this procedure, the liquidation is going through the firstly the assets will be realized, means sell out into the business world. After the sell out the business, the property, inventory and equipments sold out. Then debt settlement. The second process is debt settlement. In this debt settlement, all the assets are sold out. The amount that is collected from the assets realization paid to the preference creditors, preferentially paid to the amount to the other stakeholders in the hierarchy of the payment. Distribution, this is a payment to the hierarchy of the sequences of payment. There is a liquidations have the types. The first type is voluntary winding up of the company. When the equity shareholders voluntary come together and seeing the business situation that is very scary. There is various remedies taken, but the business doesn't come up from the financial crisis to healthy financial situation. In this situation, the members of the company, that is shareholders of the company and directors, combinedly take the decisions to voluntary winding up of the business. Then another type of the business of voluntary liquidation, that is after the voluntary liquidation, that is a compulsory liquidation of the company. In this compulsory liquidation, when the memorandum of associations and articles of association doesn't followed by the company boards and management, in this situation the business goes into the liquid insolvency. So there is a proper reason due to the not followed the memorandum of association and articles of association. There is a compulsory winding up of the company. In this situation, the company compulsory wind up by the order of court. Then second situation into the company compulsory winding up the situation, when the company fails to pay the installments and debt to the of the creditors and other stakeholders. In such a situation, they go into the court. The court pass the judgment in the if the pass the judgment in the favor of the creditors and others secured creditors. In this situation, the company gave the order by the resolution of the court. The company going to the compulsory winding up. Legal basis: Companies Act 2013 and Insolvency and Bankruptcy Code IBC 2016 rule gives the procedure of the winding up of the company. The Insolvency and Bankruptcy Code 2016 have the procedure. The IBC was a game changer because it shifted the focus from liquidation to resolution. In this IBC code, there is some of the trigger points. If any company defaults rupees 1 crore, approx 1,20,000 crore rupees or more, then second trigger point is the CIRP phase. In this situation, the CIRP means corporate insolvency resolution process. Before the liquidation, a company must undergo the corporate resolution process, that is KIRP. The goal is to find the buyer to save the company. Then the 180-day rule, the process is strictly time bound. If the resolution plan is approved, doesn't approved within 180 days, extendable to 170 to 330 days, the company automatically enters into the liquidation. Adjudicating the authority, the National Company Law Tribunal (NCLT) act as a specialized court for these cases under the guidelines of the IBC, that is Insolvency and Bankruptcy Code 2016. Then in the other side, the Companies Act 2013 section 271 to 275 have some guidelines regarding to the liquidation of the companies. In these rules, the specific grounds for the winding up is arise within the companies. The company go into the liquidation. The special resolution, the company itself, with the help of the shareholders, 75% majority shareholders are stakeholders in the favor of the winding up, the tribunal can give the orders to winding up the company. sovereignty and integrity. If the company has acted against the interest of the sovereignty of the India or public order, so in this situation the company compulsorily winding up, because suppose a business is working into the car business of the company, but the company started the production which is not mentioned to the public or private limited business sectors, that is making the bomb or other inflammatory products, which is conducted and produced by the army and other government foreign secretariats code of conducts. In such a situation, the the business is started by the company. The company affects the sovereignty and integrity of the India. In such a case, the business will be winding up. Then fraudulent conduct. The business conduct the fraudulent activities to fraud, to deceive the peoples, to deceive the citizens of India. In such a case, the stakeholders have the suffer the losses. In such a case, the due to the fraudulent conduction of the business, the business can compulsorily winding up. Default of filing. Some kinds of, after the starting the business, every business should have the proper filing and documentation must be maintained, but the business doesn't prepare the such kind of the filing and documentation. In such a case, the it creates the reliance, it creates the trust issue. In such a case, the company uh, doesn't maintain the books of account, that is financial statements of last 5 years. In such a case, the company will be known for the default in filing. So in such a case, the company will be wind up. Then the waterfall mechanism. How the section 53 of the IBC, it perhaps the most ethical technical detail. It indicates the strictly priority of who gets the paid first when the assets are sold. If the money runs out at level 2, level 3 gets nothing. In such a case, the company goes into the liquidation of the company. In the liquidation hierarchy, the stakeholders will get the amount as sequence on the priority basis. The first priority, insolvency resolution process, that is insolve the liquidators liquidation fees, liquidator remuneration and other liquidation cost. It is firstly paid in a priority, that is first preference. Second, secured creditors who have the mortgage the assets. In such a case, the mortgage creditors will give the second order. Then there is a workers dues into the company. The in the positive feelings about the workers. In such a case, after the paying the mortgage loans, then second preference, after the another side second preference to the workers dues of last for 24 months. Then third, preference to the give to the employees wages. Then fourth, unsecured financial creditors. Fifth is the government dues which is not paid by the company. Six, any remaining debts and dues. Seven, preference shareholders. Then lastly, given to the actual owner of the business, that is equity shareholders. Why liquidation occurs? This is a reasons. This is a push factors of the companies to take the decisions of the liquidation. First push factor is the insolvency. When business going to the insolvency simple definition is when the company's liability is more than the assets. Simply we say it is a insolvency of the business. So in this financial failure, the company can take the decisions of the liquidation. So why the financial issues arise? The company cannot pay the financial debts on time. Then trigger point is the bank creditors like banks, then raw material suppliers who are give the loans to us, that is bank loans, bank overdraft, supplier gives the raw material to us for the production. In this case, the default amount hits to rupees 1 lakh or rupees 1 crore, up to 1 crore. In such a case, this trigger point also the trigger to the gun of the liquidation. Then outcome: if no buyer is found to save the business, the court orders sale of paid to the pay debts. Then regulatory non-compliance: some kinds of the legal penalties not followed by the existing company. In this case, the this may be the cost to the breakdown or stop down the business due to the due to the administrative duties not followed by the company. The in the regulatory non-compliance, there is a trigger of the liquidation of the company. The trigger is the government or NCLT orders shut down if the company to fails to file the financial returns of last 5 consecutive years. Then acts against the national security or public order. If the company works against the sovereignty of the India, so in such a case it is a against the national security. Then if it is found to be vehicle for fraud, if the company going to the fraud, this is a heavy fraud, so in such a case company trigger out for the liquidation of the company. Then voluntary liquidation of the company. In this voluntary liquidation, this cause the owner decide to close the solvent company, one that can pay its debts. The trigger point of this voluntary closure is the business goal has been achieved. If the company starting for the construction of the flyover, after the completion of the flyover, the company automatically liquidate. Uh, then the company no longer profitable after the some kinds of the time. The company doesn't make the profits, doesn't give the assurance of the profit. In such a case, the company go into the liquidation. The owners want to retire or cash out. Suppose the owner of the company doesn't willing to start and continue the business. In such a case, they willingly decide and shut down of the business, that is liquidation of the company. Then types of liquidation: voluntary, when the shareholders and stakeholders voluntarily come together and doesn't want to continue the business. In such a case, they pass the resolution legally and follow the legal process. In this case, the company going to the liquidation, that is a voluntary liquidation. Compulsory liquidation: when the company doesn't follow the roadmap, route or legal bindings. In such a case, the company works against the sovereignty of the India, sovereignty of the national citizenship. In such a case, the company go into the liquidation by the order of the court or legal laws. In such a case, the company go into the liquidation. Then provisional liquidation: this is a temporary or emergency measure to punish, to find a risk in the business, or some of the reasons are affect to the provisional liquidation. In the provisional liquidation, but it is a temporary provisional for the liquidation of the company, but not a permanent. In this measure, it is used to full the winding up or order is granted, but it's bit like a putting a company in a protective bubble. Why use it? In this case, there is a risk that directors might hide assets or destroy the records of the before the official liquidation starts. The goal is safeguard to the company the value while of the court decide its final fate of the company. The fate of the company depends on the courts. So courts, if it's favor in the continue the business, so provisional can be cancelled or removed. But the code in against unfavor in the form inside of the company, so provision can be continue and company will be liquidated automatically. Then process of liquidation. The firstly, the liquidation is if the decision is taken out in such a case, the firstly the petition must be required for the legality causes in this case. But in case of the voluntary liquidation, the petition essentially resolution passed by the shareholders to wind up of the company. But in case of the compulsory liquidation, will be taken to the trust of the creditors, shareholders and other directors. Should be filed the petition in the court and by aligning the insolvency purposes and relying insolvency documentation, that is the financial statements. In such a case, the petition will be filed into the court in or tribunal. So after the tribunal, the tribunal can appoint the liquidator of the company. Once the petition filed, there is a accept the resolution is passed, the liquidator is appointed by the court or management, depends on the situation. This is an independent professional who is expert into the liquidation field. At this moment, the director lost their powers, all the their authorities, and the liquidator can take the full control over the company and take the decisions about the sale of the properties and payments of the loans and advances. Third procedure is collection and realization of assets. The liquidator, after taking the control over the company, it's his primary job, his priority job is to gather all the assets and sell them, sell out the assets. In this process, the collection of the funds from the physically sell out the assets like as machinery, building, plants, whatever the assets. Then after the realizing the assets, the first stage is settlements of liabilities. Once the liquidator uh, has the full and collect the amounts, decide the sequence of the payment of the funds to the third parties, like as the first preference. We earlier table we think about the first to liquidation fees, liquidators remuneration, then workers last 12 to 24 months salary, and other things which is mentioned after the another table. Distribution of the surplus. If the amounts are totally distributed to the stakeholders, firstly liquidation fees, liquidator remuneration, then mortgage creditors loans, then preference shareholders and other stakeholders in this mentioned in the sequence. Then remaining amount will be distributed to the shareholders if there is availability of the funds. Then checklist of the documents. While the collection and realization, corporate ownerships and records will be collected. These are the checklist, certificate of the incorporation and articles of association, also memorandum of association, assets register, lease agreements, intellectual property records, that is trademark, patents and copyrights also. If there is a website, the domain name registration, formal documents are required. For banking purpose, there is a required the document, bank statement, investment record, checks, books and credit cards, valuation reports, accounts receivables, money owed and the company, age of debtors and ledgers, unpaid invoices, customer contracts, also may required for the documents to be submitted to the legal authorities. Checklist of document. This is the physical documentations of the assets. Vehicle, if there is a vehicle to the company, so all the related own documents of the cars and trucks and vans and other four wheelers of the company, and their ownership document. If there is a inventories in the company, in such a case the investors, the inventories, proper books, ledger books have to be produced there. Insurance policies required to produce there. Legal statutory documents also required. Details of pending litigation, list of charges and mortgages, key access codes of the softwares and digital passwords also produced there. In such a case, the proper authority like directors who have the rights to conduct the above the activity, he provide all the documents with the dignity, with the fact, with the truly. In such a case, suppose a director fails to do its own duty, in such a case the directors have the personal responsibility to abide the rules. In such a case, he follow all the rules and regulation. Packing of order, payments. These are the packing of order after the collecting the amounts of sold out the asset. The liquidators related all the expenses, the like as liquidator fees, liquidation cost, liquidator remuneration afterwards, secured creditors, preferential creditors, unsecured creditors, and shareholders. In the shareholder, firstly to the preference shareholders, and then afterwards the amounts are available last to the equity shareholders. This is the example, practical examples of Matthew Limited who is going to the liquidation. This is a simple example. Share capital is rupees 6 lakhs out of 1 lakh rupees of the preference share capital, and remaining 5 lakhs are the equity shareholders capital. In such a case, reserve profit and loss account, there is a loss 1 lakh rupees, 12% debenture, that is 2 lakh rupees. Creditors preference shares to 20,000, unsecured 80,000, that is 1 lakh total amount. Preference creditors are 1 lakh 20,000 and unsecured creditors are 20,000 80,000. Outstanding expenses 10,000. Total assets, land and building 3 lakhs, plant 2 lakhs, 1 lakh 50,000. Stocks, debtors 2 lakhs, then cash at bank 20,000. Miscellaneous expenditure 1 lakh 40,000. The total tally 10 lakh 10,000, 10 lakh 10,000. So this is a balance sheet of the old company, that is Matthew Limited. Then the Matthew Limited distributes the amount after the collecting the realization of assets. This is an example, land and building rupees 3 lakhs, but it's after the sold out, its amount we recovered, that is 2 lakh 80,000. Plant 1 lakh 75,000, 1 lakh 20,000, 1 lakh 60,000. Miscellaneous 0. Cash at bank transfer rupees 20,000. This is given into the here cash at bank. So these amounts will be collected. Then priority payments, liquidation expenses 54,000, liquidator remuneration 3% on realization, income tax 44,500, final payments on 31st March 1999. Then this is the sources from the sold of the assets fund. Then this is a payment. Then liquidation expenses, liquidator remuneration, income tax, preferential creditor payments, remaining 80,000 afterwards. Then debentures, principal interest. So this is payment. Then lastly we have the preferential capitals 1 lakh rupees, but we have the only 76,450. This amount given to the preference shareholders, and remaining amount they will be abandoned. Then equity shareholder doesn't get the any amount. In such a case, they have to bear the loss because they have not available the funds. in this case the preference shareholders have to pay 1 lakh rupees, but they have only 76,450, means the company faces the heavy losses. Working notes, this is the working notes. Total realization of assets 2,80,000 of land and building and other assets. Totals are 7,35,000. uh, After realizing the asset, total receipts are 7,35,000 plus 20,000 of cash and bank balance, that is totally 7,55,000. Then liquidated remuneration 3% on 7,35,000 is 3%, that is 22,050. Then preferential credit, then preference dividend, order of payments, debt interest, unsecured creditors, totals available of unsecured creditors, final distribution. Surplus amount only given to the preference holder, but they have also the lesser amount because they have to pay 1 lakh, but they have near about 76,450. In such a case, we have the discuss the liquidation process in accounting formula, in accounting procedure. Then while we take care, when we dissolve the company, when we liquidate the company, no calls are needed because equity shareholders gets nothing. So this is the practical aspects of the accounting problem of the liquidation of company. Thank you.